Hi, this is Atticus Analysis, and I wanted to just sort of record a little video slideshow about Syndax, which is a really complicated story. I'm recording this a little bit informally. There may be some background noise from my air conditioner, but I thought about this. I was like, should I make this like a long, detailed article on Seeking Alpha? Could make some money, but they don't pay that much, and you have to do all these restrictions and stuff, and I didn't really feel like going through that whole rigmarole. And then I was like, I could make this into a traditional podcast, but let's be honest, what I really wanted to do was I just kind of wanted to organize my own thoughts. So this is going to be aimed more for myself and trying to understand this story, and maybe try to talk myself into figuring out the right position size. Position sizing has been a bit of a struggle. So yeah, this is going to be just kind of off the cuff. I have 25 slides, so this is going to be a little bit of a deep dive, but yeah, I think it's worth it. So before I get into that, I think before I explain the complexity, I have to kind of sell why the complexity is a good thing here. And I think the concept that I want to explain is information asymmetry, right? Sometimes there's a really cool stock, and you want to buy it, but it's too expensive, and you say, well, okay, how do I know if it's a good price? Will it have a dip? Is the stock going to keep going up even though it's expensive? And you don't really know anything else that other people don't know. You can look at the chart, other people can look at the chart. You can look up on FinViz what's the price to sale ratio. Everyone can look up what the price to sale ratio is. You don't really have an edge. You can invest in companies that you think are cool, you can trust an analyst, but you're not really doing thinking in that way. You can't necessarily say, well, I'm just going to chart better than all the other people that want to do charting. I don't think you can do that. There is one thing I can do, and that is I can do reading. I can do reading comprehension. And I think I can do that better than other people. In part because it's a very time-consuming and boring process. Most people don't want to read reports. And second, because it's impractical. I mean, there's just so many companies out there. There's 10,000 companies. You can't do in-depth research on all of them. So by definition, if you choose to read detailed reports of some of these companies, you're just going to have an edge over the majority of market participants. But quantifying how that edge matters is kind of complicated, because sometimes you can read information that doesn't necessarily help you. Just because information exists doesn't necessarily mean it's beneficial in terms of recommending whether you buy or sell a stock. A really good example of this was recently BridgeBio. When BridgeBio was about $39 a share, something like that, they did a presentation with Goldman Sachs in Miami, and they said that they didn't have any competitive drop-off when Alnylam launched their own product. They said, we didn't see any impact. April was similar to March. May was similar to April. And that made me think, okay, people were nervous that there'd be a drop-off, and it didn't happen. And, following that, the shares went up by about 10-15% in the next couple of weeks, because people found out about it slowly. They couldn't find out about it quickly. They couldn't analyze it with AI or anything, even if they wanted to, because there was no transcript. You had to listen to the actual presentation webcast on their investment relations page. And again, the vast majority of people just aren't going to take the time to listen to a 30-minute conversation with Goldman Sachs. They're not going to. Now, this obviously is a presentation that you can read the transcript of, Syndax's Q2 earnings report, but this is one of the most information asymmetric reports I've ever read. There's just so many little nuggets. Every time I reread this, I feel like I'm learning something new. That was another reason why I kind of wanted to make this video, was because I wanted to sort of force myself to really analyze every single page, every paragraph of this report. It's just chock full of really interesting information, and it's information that you will not find on FinViz, you will not find on Seeking Alpha even. You're just not going to find it unless you read the report. And that makes me think that even though the stock is up something like 20-25% from where it was before this report happened, it has a lot more upside because the information asymmetry is so strong. The other thing that makes me think it has more upside is, the valuation is cheap, but again, that doesn't matter. It's not about whether the valuation is cheap. It's about whether, as people slowly read this report, are they going to come away more impressed or less impressed than they were prior to that, and I think more. The other thing, to keep in mind is that this is a stock that is, has no sentiment at all. Not only is it cheap, but it's also being heavily shorted, 28% short, which makes it in the top 10% most shorted biotechs. It's trading at a low valuation relative to itself just, a couple of years ago. So in other words, before it was approved, it had a higher, it had a higher price than it does now. Even though the launch has gone really well. So yeah, by pretty much every metric you can gauge, this is a company where people don't really believe in it, and they're just starting to believe in it now. And I'd actually rather buy the stock at 12 than buy the stock at 9, before the report. The reason why I say that is just because I like the fact that it's gone up. I don't necessarily have to buy it right at the bottom. The fact that this report pushed the stock up, I think, is kind of proof that people are getting it. I don't think everyone has gotten it yet. I think there's still a lot of room to run here. But yeah, I think there's this initial burst of attention that's going to hopefully continue as people read this. So I'll go ahead and go to the first section that I wanted to look at. And the first section is we have they say they have rapid growth in the second half of 2025 with a combined best-in-class therapies, 2 therapies for $10 billion. So right off the bat, we have to kind of pause for a minute and we have to say, what does that mean? Well, they have 2 drugs, one of which they don't own completely. They sold half of the rights to Incyte. And the other drug they own completely. And those 2 drugs they each say are worth $5 billion. So let me rephrase that. The 2 drugs each have a total addressable market of $5 billion. So they say it's a $10 billion opportunity between them. Now, it's really important that even that, just like opening paragraph, actually speaks miles about like how big the opportunity actually is. Because as recently as May of this year, they said it was a $4 billion opportunity. And if you go back to the beginning of the year, Syndax said that it was a $750 million opportunity for their lead asset. This is the one that they own completely. This is the more important one, Revuforj. So how did it go from 750 million to 5 billion? Is that just management trying to brag? No. So the indication that they're actually approved for is 750 million. But they believe that they are going to get expanded label opportunity to more patients. That will increase it to 2 billion, and then they're doing additional studies that will expand this out to a total of 5 billion. So effectively, they've been kind of expanding the scope of things. So if you're skeptical, you could say, okay, this doesn't really matter because this is just all hypothetical. They might not get the expanded label. They might not, have positive readouts on the additional studies. It doesn't matter. And I agree to an extent. It doesn't actually matter. But what matters here is that there are some people who haven't checked in on this company in a while. And if in the past they thought it was, a $750 million opportunity, and now they're looking at this slide and hearing this person say, oh, it's actually a $5 billion opportunity, they're going to rewrite their models for valuation. The analysts are going to treat this as potentially, it has the potential to be a much bigger drug than the company was describing it in the past. So even if you don't necessarily think that this actually matters, I think you kind of have to contend with that there will be other people who decide, what goes in what fund, who do think that this matters. And it's just sort of like the company's management is learning to be more ambitious communicators, which is always a good thing. You want management to sound like they believe in the future of the company. Okay, so the next thing I wanted to show was, I want to talk a little about the other thing, Niktimvo. So Niktimvo, I said they don't own all of it, so they had to give away half of it to Incyte as like a profit sharing, expense sharing thing earlier. in their development, and then they further sold off 13.8% to a financing partner. So they only actually have, whatever it is, 39 odd percent of it, unfortunately. So when I say that this is a $10 billion opportunity, that's not quite right, because they don't own all of it. They own half of this one, and then they had to give away the 13.8%, up to 350 million or something. I forget exactly what it is. They have to be repaid back 2.5x in order for that percentage to stop. So it's not a full 10 billion. It's more like 7.5 billion. But I mean, realistically, it doesn't really matter here, again, because the valuation is just so incredibly light. Bridge Bio, for example, talks about saying, we're going to have $8 billion in total, total addressable market opportunity. We believe we're going to have $8 billion in sales. And that's a $9 billion company. So this is a $1 billion company. And, we have to debate, is it $10 billion in sales that they're going to have? Is it 7.5? Is it 6? Frankly, even if it was 2, even if this company ended up maxing out and just having $2 billion in sales, with 96% gross margins, that would still be very, very good. That would still be way higher than, a $1 billion company. So it doesn't have to do that well at this level. I'm just providing some clarity there in terms of how this works. Now, also, I'm gonna say that it says that they're trending in line with another drug launch, Rezurock, which had a $500 million launch within three years. So just keep that in mind for later. What they're saying is that within 3 years, a similar drug was able to get 500 million. They think that they could also get 500 million, which would mean that they'd be getting, whatever it is, 212 million after deducting the share thing. This will come up later, so I'm just explaining it. So now we have the first thing that I think a lot of people are going to miss. Bill Murray, who is leaving the company to become the CEO of Insight. He was previously on the board of directors. So this seems like it's just typical corporate PR stuff. Thank you, person, for leaving the company, and thank you for your years of service. Nope, this is actually extremely important. Insight is the company that they sold 50% of Niktimvo for. That's what they are mentioning in the second part of this paragraph. And a member of the board of directors for Syndax is leaving the board to become the CEO of Insight, the company that is most likely to buy Syndax if it's going to get bought out. The reason why I say that is because not only are they partners, but also if Syndax, Syndax has a special connection to Insight, because if Insight really believes in Niktimvo, they don't want to have to share that 50%. They want the whole thing. So if they buy out Syndax, then that question kind of answers itself. So you have pretty much the best way this could be setting up in terms of the new CEO being someone that already believed in Syndax because they were on the board of directors. So yeah, I'm not saying that a buyout is likely, but this is another one of those things where, again, even if you don't personally think a buyout is likely in the near term, you know that there are going to be some people who read this and think, oh, a buyout could happen. And I think, yeah, it definitely could. Okay. So first thing about the launch, they say that they've already penetrated 25% of the annual market of 2,000 patients for their preliminary indication, and they're on track to penetrate 50% by year's end, which is fantastic for a launch. Getting 50% of the entire total addressable market in 1 year for a small $1 billion company, that's pretty phenomenal. Okay. They also are mentioning that the drug is being started earlier. So to put this into perspective, the leukemia indication that the company was approved for, when they did their trial, they got the sickest patients. These people had already failed 2 different forms of chemo, and they were basically on death's door. I believe the median survival rate for people who didn't get this treatment was something like 2.5 months. So basically, the patients that they were treating were almost dead. And so it shouldn't be surprising that the trial results were actually not that amazing. And I think that's one of the reasons why this was kind of like a not very believed in, heavily shorted stock, was because if you only look at the specific trial that got them approval for this indication, the drug doesn't actually look that good. It says, oh, okay, 22% of people beat the cancer, when before, less than 10% did. So this is going to be like, your last chance of beating cancer, but it's only going to work 22% of the time. What they're saying, though, is that that was because the way the trial was, they were specific, they couldn't pick their own patients. They were specifically given patients that had already failed two forms of chemo and were almost dead. And now that they're getting people who, are starting this treatment earlier in their disease progression, they're getting a chance to have a much bigger impact. So that means that they could be on the drug longer because they're surviving longer. So that's very, very important. This very much reminds me of ADMA, where they mentioned that, they didn't expect people to be on the drug as long as they were, and this is sort of expanding the market for them. And that was another one of those intangibles that really made me realize ADMA was going to be a major winner. This, people are going to be on the drug longer thing. Okay, so the next thing I wanted to talk about was how much of a difference that's making. So they specifically say here that a third of people are getting to a transplant. That's way, way higher than it was during the trial. So that's typically what they want people to do, is they want people to get like what they call a curative stem cell transplant to help them with their leukemia, and they have this drug before and after that transplant procedure. So what you're seeing is, instead of a 22% response rate, you're seeing a response rate. I don't think they specifically mentioned what the response rate is, but it was way less than 22% of people actually progressing to getting a transplant in the trial, and now it's up to a third. So this idea of, well, we're going to treat people earlier and that will get a better reaction than we had in the trial, that thesis is playing out in a way that is almost unimaginable beforehand. If you were a prospective investor, and again, you only looked at the trial, you would think that the drug wasn't that good. But if you look at this, you're going to say, oh, okay, it's actually performing way better in the field. But you have to read this transcript to figure that out. Okay, so this is another thing that is, I think, hard data in terms of my thesis about that. It's going to be, people are going to be on the drug longer. So initially they had expected 4 to 6 months of treatment. Now they're saying 6 to 12 months, which is obviously a lot longer. You have to also consider, what is the total addressable market? Earlier they had said 750 million. If you have patients that are on the drug longer and then they're also surviving longer, you don't even necessarily have to have more patients. You just have to have patients that are, again, surviving and staying on the drug in order to really change those numbers. Okay, so the next thing I wanted to say was right here. It says, we are outperforming on key metrics, revenue, prescriptions, patients, coverage, everything. This is why they think they can exceed $5 billion. And I'm going to go ahead and show you a chart here. This is the last 4 drugs that have launched for this type of disease. And you can see that Revuforj has outperformed all of them. And again, it's very important to also keep in mind, again, this is a company that's never sold a drug before. It's a very small company. Some of these other companies had the biggest partners in the world. I believe Takeda, which is the largest pharmaceutical company in Japan and a top 10 pharma company worldwide, was a partner for one of these drugs. And these guys are outselling a Takeda-backed drug. Okay, another key piece of information, they say they can get to profitability with the resources they have today. No need to do a raise. That's always fantastic. A lot of people have been very critical of their cash burn. They're spending a lot of money. Something like $100 million a quarter, which is a huge amount for a small company. But, I mean, the reality is that they're building up a launch. There's, for one drug, they're spending half the money for the launch for the other drug. And they're also conducting multiple, different cancer trials. That's going to be very expensive. Okay, so they have said that they think they can get to 50% of the population. I think I mentioned that earlier. They think they've penetrated a quarter of the population in 6 months. Now they say that they can get 50% in a year. Now, this is what's interesting. They get a question about this in the question and answer session. And as soon as he's asked about this, the CEO immediately says, oh, well, yeah, we said we can get half, but we think we could go higher than that. So he only needs to be prodded with one question, and already he's raising the guidance that he already gave. Oh, no, it's not going to be half of the population that we grab in the first year. It will be higher than that. Okay. It will be higher than that, apparently. Another great piece of information, they say that they're getting payer coverage of 97%. I don't know of any drug that has coverage of 97%. That's fantastic. They're not having any problems with people starting and stopping therapy for their transplant. Let's talk a little bit about the expanded indication. I'm not super nervous about this with the FDA. Expanded indications usually get approved at something like 90% odds. And they mention here that expanding the indication is going to be huge. That's the thing that's going to take it from $750 million to $2 billion. And they mentioned that they think it's going to drive a lot of people to want to prescribe the drug. They're like 10% off label right now. I'm assuming that that's some physicians prescribing this drug in advance because they know that this is going to have the expanded indication. They know that it works. But as soon as they get this indication, which is supposed to be the end of October, then this will make a huge, huge difference. I'll just say this now in case I forget. If you really want to play it safe, just buy the stock now and sell like a week before this October thing. That way you get all the advantage of what will probably be a decent run-up with no risk. I personally think with a 90% chance of getting it, they'll get it. I think the Sarepta Therapeutics thing means that we're not going to see as many weird rejections for a while. We're probably going to have a little bit more lax approvals. It's really hard for me to imagine this drug not getting an expanded indication when it's performing so much better in the field than it did during trials. When was the last time there was a drug that was doing that didn't get an expanded indication? And it's not even necessarily getting an expanded indication to a different disease. It's just getting an expanded indication to like, hey, can we just treat someone with leukemia slightly earlier in their treatment cycle? It's not, it's not a big ask. So yeah, I think that will probably be a very significant pop, and I plan on holding at least most of it for that, I think. But yeah, if you wanted to do a super safe thing, just like sell before this, and it's probably, I don't know what the run-up will be, but I think it will be a pretty significant run-up in anticipation of this as people read this paragraph. Okay, so now this is what's really interesting about Niktimvo. So earlier, I've been making this kind of assumption that there's going to be people who are making, who are, after some time has passed, poring over this transcript and whipping out a calculator and making decisions on whether to invest by looking at these like arcane bits of fact, right? That is my hypothesis. You do not have to take my word for that hypothesis. You do not have to believe me, because you can actually see it happen during the call itself. Okay? So this guy, Salim Kader Syed, an analyst with Mizzou, he says, oh, okay, I'm trying to model out Niktimvo. Analysts think it'll make $240 million next year. I'm estimating that people will be on the drug for 10 months. And if you annualize the amount of money they've already made, it basically seems like that would be no additional penetration, no growth whatsoever. Is it me, or is that number incredibly light? wouldn't we exceed that number greatly based on the math? Isn't there something I'm missing? That's what he says. So he's already doing the math, and he's already realizing that the Niktimvo sales are going to be way higher than anyone on Wall Street currently believes. So this is what's so interesting. It would have been so easy for the CEO to just say, yeah, you're probably right. But that's not what he said. So this is what management actually said. He said, you mentioned 10 months. I just want to point out to you the fact that we want to keep people on this drug for years. It's a very efficacious drug. So there's a lot of upside. So thinking about your assumptions, that's one thing that stood out to me in your math you might want to take a look at. So in other words, when Syed said, oh, I think that the street's estimates are incredibly light, because if you model out Niktimvo's annualized run rate currently, next year implies no growth at all. And management responded by saying, your math is wrong because you're aiming way, way, way too low. So in other words, whatever number this guy was coming up with that was blowing the street's estimate out of the water, management is saying that number itself is also too low. It's going to be even higher than that because he estimated that the treatment time would be too low. So that's truly a remarkable exchange. It's like, hey, shouldn't the numbers be higher? Yeah, but your number is also too low. It should be even higher than that. That was basically what that conversation was. And again, these are the people who are going to be setting the targets. These are the people, in some cases, are going to be deciding whether something goes in a fund or not. These are going to be people that will be writing the research that is delivered to the high net worth clients. This is important stuff. It's more important that analysts are changing their mind now, and you can buy ahead of the firm buying, than an analyst putting out a price target. When an analyst puts out a price target, that's a sign that that firm has probably bought all they're going to buy. They put out the price target, that means they're done buying, because they would never put out a price target before the firm itself is finished. You want to buy at this stage when everyone's still whipping out a calculator, not after they actually issue coverage. And Syed has not issued coverage. I have looked for him. He has not put out anything. I'm sure he will, but he hasn't put out anything yet. So that means they're still buying. The idea that this company is essentially like, it's down over the past, I think, 6 months or something. Obviously, it's up compared to where it was a couple of months ago, but the fact that this has seen no real appreciation here is insane. It really deserves to be a lot higher. I don't know exactly. I didn't talk myself into coming up with a good position size. It's a 5% position now. Maybe 10 or 15% is more appropriate. I don't know. I do have the cash. I've sold a bunch of stuff recently, so I have the cash. But yeah, this I've just kind of scratched the surface here, honestly. I haven't even really done that much of a deep dive in terms of how exactly the products work and everything. So there's a lot more to learn. But yeah, if this is interesting to you, let me know. Let me know what you think of any of this information. Hope I explained it clearly. And thank you for your time.